Imagine the chaos unfolding on trading floors across the globe, screens flickering with red arrows plunging like daggers into the heart of fortunes built on digital dreams, as billions evaporate in mere hours. Welcome to October 2025, where the cryptocurrency market has just exploded in a spectacular frenzy of highs and lows, leaving everyone from Wall Street tycoons to everyday investors glued to their phones, hearts pounding, asking the same frantic question: what's happening? But to understand this whirlwind, we must journey back to the ashes of a global catastrophe, where one enigmatic figure ignited a revolution that would challenge the very foundations of money itself. It was the fall of 2008, the world reeling from the subprime mortgage crisis, banks collapsing like dominoes under the weight of greed and corruption, governments bailing out the titans with taxpayer dollars while ordinary people lost homes, jobs, and trust in the system. Enter Satoshi Nakamoto, a pseudonym cloaked in mystery, perhaps a single genius or a collective of visionaries, who on October 31, 2008, unleashed a 9-page white paper titled Bitcoin, a peer-to-peer electronic cash system, proposing a radical idea. A decentralized currency free from banks, governments, and intermediaries, powered by blockchain technology, a digital ledger that records transactions across thousands of computers, immutable, transparent, and secure through cryptography. Satoshi's vision was born from the financial meltdown, a cry for independence in a world where central authorities had failed spectacularly. And on January 3, 2009, the Genesis block was mined, embedding a headline from the Times newspaper: "Chancellor on brink of second bailout for banks," a subtle jab at the flawed fiat system. Bitcoin started humbly, worthless in tangible terms, but early adopters, cypherpunks, libertarians, and tech enthusiasts, saw its potential, mining coins on personal computers, trading them on forums like BitcoinTalk, where Satoshi himself engaged in discussions until vanishing in 2011, leaving behind a protocol that would evolve without a leader. By 2010, the first real-world transaction occurred when programmer Laszlo Hanieks paid 10,000 bitcoins for 2 Papa John's pizzas, a deal now legendary as those coins would be worth hundreds of millions today, symbolizing the shift from abstract code to actual value. The market stirred, prices creeping from pennies to dollars, but volatility was baked in from the start. In June 2011, Bitcoin surged to $31 before crashing to $2, a pattern that would repeat like the rise and fall of empires. Undeterred, the community grew, with exchanges like Gox emerging in Tokyo, handling 70% of trades by 2013. But shadows loomed as hacks and scandals tested the nascent ecosystem. In February 2014, Gox collapsed after losing 850,000 bitcoins to theft, wiping out $460 million and sending prices tumbling from $1,242 to $220, a gut-wrenching blow that exposed the risks of centralized platforms in a decentralized world. Yet from the rubble rose resilience, as survivors pushed for better security, hardware wallets, and regulatory scrutiny. Meanwhile, Bitcoin's underlying technology inspired imitators, Litecoin in 2011, offering faster transactions, and Ripple in 2012, focusing on cross-border payments. But the true game-changer arrived in 2015 with Ethereum, brainchild of young prodigy Vitalik Buterin, who at 19 envisioned a blockchain not just for currency but for smart contracts, self-executing code that automates agreements without lawyers or banks. Opening doors to decentralized applications, or DApps. Funded by a crowd sale that raised $18 million, Ethereum launched amid excitement, its native token Ether fueling the network. And by 2017, the crypto world erupted in a feverish boom. Initial coin offerings, ICOs, exploding as startups raised billions by selling tokens, promising revolutionary projects from decentralized storage to gaming ecosystems, with Ethereum as the backbone. Prices skyrocketed. Bitcoin hit $20,000 in December 2017, Ether soared to $1,400. Fueled by hype, FOMO, fear of missing out, and media frenzy, stories of overnight millionaires captivating the masses. But beneath the euphoria lurked overvaluation and scams, Ponzi schemes masquerading as innovations. And when the bubble burst in early 2018, the crash was merciless. Bitcoin plummeting 84% to $3,200, wiping out $700 billion in market cap, leaving investors devastated, projects abandoned, and regulators circling like vultures. The crypto winter set in, a period of despair and consolidation from 2018 to 2020, where only the faithful endured. But innovation didn't halt. Developers built DeFi decentralized finance protocols on Ethereum, allowing lending, borrowing, and trading without banks, platforms like Uniswap and Aave emerging as beacons of hope. Then came the pandemic in 2020, a black swan event that ironically turbocharged crypto's resurgence. As lockdowns drove people online, stimulus checks flooded economies, and inflation fears mounted. Bitcoin, positioned as digital gold, a hedge against fiat debasement, surged anew, breaking $60,000 in March 2021, propelled by institutional adoption. Tesla invested $1.5 billion, MicroStrategy bet its treasury on BTC, and PayPal enabled crypto purchases. Ethereum upgraded with proof of stake in the merge of 2022, slashing energy use and setting the stage for scalability. But volatility struck again. The 2022 bear market, triggered by rising interest rates and the spectacular implosion of Terra Luna, a $40 billion stablecoin project that unraveled in days, dragging down the market, followed by the bankruptcy of FTX in November 2022. Once a $32 billion empire led by wunderkind Sam Bankman-Fried, exposed as a fraud-ridden house of cards. Evaporating $8 billion in customer funds and shaking trust to its core. Yet like a phoenix, crypto rose once more, with Bitcoin ETFs approved by the SEC in January 2024, opening floodgates for mainstream investment, BlackRock and Fidelity launching funds that amassed billions, pushing Bitcoin to new highs above $100,000 by late 2024. Enter the NFT craze of 2021-2022, non-fungible tokens turning digital art, music, and collectibles into blockchain-verified assets. Beeple's artwork selling for $69 million at Christie's. NBA Top Shot generating millions. But the hype faded into a bust, as values crashed 95%, leaving many with worthless JPEGs, though the technology persisted in gaming and metaverses. DeFi evolved, yielding farms and liquidity pools attracting yield chasers, while Web3 promised a user-owned internet, challenging big tech's dominance. Geopolitically, El Salvador made Bitcoin legal tender in 2021, a bold experiment amid IMF warnings, and nations like Nigeria and Argentina turned to crypto amid currency crises. Fast forward to 2024-2025, a roller coaster of unprecedented scale. The year began with optimism, Bitcoin having in April 2024 reducing supply, historically a bullish signal, and as U.S. elections loomed, crypto became political, with candidates courting the industry, leading to deregulation whispers. By mid-2025, the market boomed, altcoins like Solana and Cardano surging on Layer 2 advancements, integrated tokens exploding as blockchain met machine learning, stablecoins like USDT and USDC ballooning to trillions in circulation, powering cross-border remittances and DeFi. Ethereum's Dencun upgrade enhanced scalability, reducing fees and enabling mass adoption. But tensions brewed, regulatory crackdowns in China and Europe, environmental concerns over proof-of-work energy consumption, and macroeconomic headwinds from persistent inflation and geopolitical strife. Then in October 2025, the explosion hit its peak and nadir simultaneously. Early in the month, altcoin history signaled a Q4 breakout, social buzz and on-chain metrics pointing to a massive rally, with predictions of Bitcoin hitting $500,000 triggered by institutional inflows and AI synergies. Stocks tied to crypto, like Coinbase and MicroStrategy, poised for explosive growth. Yet on October 12, disaster struck. A record $19 billion crash triggered by former President Trump's announcement of new China tariffs, exacerbating U.S.-China trade wars, fueling a leverage-fueled meltdown as overleveraged positions liquidated in a cascade, Bitcoin dipping below $112,000. The total market cap shedding $1 trillion in days, down to $3.88 trillion by October 16. Ether and XRP tumbling alongside. Then in October 2025, the explosion hit its peak and nadir simultaneously. Early in the month, altcoin history signaled a Q4 breakout, social buzz and on-chain metrics pointing to a massive rally, with predictions of Bitcoin hitting $500,000 triggered by institutional inflows and AI synergies. Stocks tied to crypto, like Coinbase and MicroStrategy, poised for explosive growth. Yet on October 12, disaster struck. A record $19 billion crash triggered by former President Trump's announcement of new China tariffs, exacerbating U.S.-China trade wars, fueling a leverage-fueled meltdown as overleveraged positions liquidated in a cascade, Bitcoin dipping below $112,000. The total market cap shedding $1 trillion in days, down to $3.88 trillion by October 16. Ether and XRP tumbling alongside. 3 key reasons fueled hope for a rebound. Historical patterns showing booms follow busts, like the epic rally after 2018. Untapped institutional capital waiting on sidelines, and innovative catalysts like real private market access via tokenized assets, promising transformative upside. As traders explored cross-market opportunities, Bitcoin's influence on AI tokens amid tech booms suggested a fusion of industries. Samson Moe warned time was running out to buy low, predicting a swift climb to $1 million. This volatility, this explosion of value creation and destruction, echoes the core of crypto's story. A tale of human ambition, technological ingenuity, and the eternal dance between greed and fear. From Satoshi's humble white paper to the trillion-dollar crashes of 2025, cryptocurrency has redefined money, empowering the unbanked in Africa with mobile wallets, enabling artists to monetize directly via NFTs, and challenging central banks with CBDC experiments worldwide. Yet dangers persist. Scams like rug pulls in DeFi, where developers vanish with funds. Environmental impacts mitigated by green mining initiatives. And philosophical debates over decentralization versus efficiency, as Layer 1 chains compete with faster alternatives. Emotional stories abound. The miner who struck it rich in 2010, retiring to a tropical island. The investor who lost everything in the 2018 crash, only to rebuild in 2021. The entrepreneur in Venezuela using Bitcoin to escape hyperinflation, buying food for his family. These personal sagas humanize the code, turning abstract algorithms into lifelines. Historically accurate, this journey traces back to precursors like David Chaum's DigiCash in the 1990s, an early eCash system that failed due to centralization, or Wei Dai's B-Money and Nick Szabo's BitGold concepts that inspired Satoshi. The 2013 boom saw Bitcoin cross $1,000 amid Cyprus bail-ins, highlighting its safe haven appeal, only to crash 80% in 2014-15 amid regulatory uncertainty. The 2017 ICO mania raised $5.6 billion, but 80% failed, leading to SEC crackdowns on securities violations. Post-FTX, reforms like proof of reserves audits bolstered exchanges, while Binance's $4.3 billion fine in 2023 marked a turning point for compliance. In 2024, the approval of Ether ETFs followed Bitcoin's, signaling maturation. By 2025, tokenization of real-world assets, real estate, art, stocks on blockchain, promised to unlock $10 trillion in value, blending TradFi and DeFi. Amid the October crash, voices like those in DL News highlighted increasing liquidation risks. Yet Coin Central spotlighted October as a boom month for cryptos offering private market access. Economic Times reported the deepening crash, but Investex countered with predictions of a massive rebound. This duality captures crypto's essence. A high-stakes drama where fortunes flip in heartbeats, innovation clashes with regulation, and the promise of a borderless, equitable financial system battles entrenched powers. As we stand on October 20, 2025, with markets licking wounds from the $1 T wipeout, yet buzzing with stablecoin resurgence and altcoin whispers, the question, what's happening? Echoes louder than ever, not just a query but a call to witness history unfolding. A cinematic saga of rebellion, ruin, and redemption that continues to captivate, challenge, and change the world. One block at a time, drawing us all into its inexorable pull, wondering what explosive twist comes next in this unending epic of digital destiny. But let's delve deeper into the origins. For to grasp the present explosion, we must revisit the shadowy birth of Bitcoin in more detail. Satoshi Nakamoto, whose true identity remains one of the greatest unsolved mysteries of the digital age, could be Hal Finney, a cypherpunk who received the first Bitcoin transaction, or perhaps Nick Szabo, inventor of smart contracts, or even a government agency testing waters. Speculation runs wild, but facts show Satoshi mined the first 1 million Bitcoins, now worth billions, yet never spent them, a testament to ideological purity. The blockchain's genius lies in its consensus mechanism, proof of work, where miners solve complex puzzles to validate blocks, earning rewards, a process that started on CPUs but evolved to ASICs, specialized hardware, creating an industry worth billions, with firms like Bitmain dominating. Early challenges included the 51% attack risk, where control of majority hash power could rewrite history, but Bitcoin's network grew too vast. The Silk Road darknet market, launched in 2011 by Ross Ulbricht, aka Dread Pirate Roberts, showcased Bitcoin's anonymity, facilitating $1.2 billion in illicit trades before FBI shutdown in 2013, leading to Ulbricht's life sentence and fueling anti-crypto narratives. Yet this notoriety boosted awareness, attracting investors like the Winklevoss twins, who founded Gemini Exchange after suing Mark Zuckerberg over Facebook. The 2013 China ban on banks handling Bitcoin sparked a crash, but resilience shone as prices recovered. Ethereum's arrival transformed the landscape. Vitalik Buterin's white paper in 2013 proposed a Turing-complete platform, enabling anything from DAOs, decentralized autonomous organizations, to yield farming. The DAO hack in 2016, draining $50 million, led to a contentious hard fork, splitting into Ethereum and Ethereum Classic, a schism that underscored community governance debates. The 2017 bull run was electric, with celebrities like Paris Hilton promoting ICOs, media dubbing it cryptomania. But the crash brought lawsuits, with the SEC classifying many tokens as securities. In the wilderness years, projects like Chainlink provided oracles for real-world data, essential for DeFi. The 2020 DeFi summer saw total value locked surge to $10 billion, with Compound and MakerDAO leading. NFTs burst forth, with CryptoKitties clogging Ethereum in 2017. But 2021's boom saw OpenSea hit $3 billion monthly volume, artists like Pac and Grimes cashing in, only for the 2022 bust to reveal overhyping. Metaverses like Decentraland and The Sandbox promised virtual economies, but user adoption lagged. Institutionally, Grayscale's Bitcoin Trust paved the way for ETFs, while MicroStrategy's Michael Saylor became a vocal advocate, borrowing billions to buy BTC. El Salvador's Nayib Bukele faced protests but persisted, building Bitcoin City with volcano-powered mining. In Africa, Nigeria's eNaira CBDC competed with grassroots crypto use amid Naira devaluation. 2023's banking crises, like Silicon Valley Bank's collapse, echoed 2008, boosting Bitcoin as alternative. The 2024 halving, reducing rewards to 3.125 BTC per block, coincided with spot ETF approvals, inflows topping $50 billion. Ether's Shanghai upgrade enabled staking withdrawals, unlocking billions. By 2025, AI crypto hybrids like Fetch, AI and SingularityNet boomed, using blockchain for decentralized AI training. Tokenization gained traction, with BlackRock launching funds for real estate on Ethereum. Regulatory milestones included the EU's MiCA framework, providing clarity, while US lagged amid SEC versus Ripple lawsuit resolution. XRP deemed not a security. The October 2025 crash, detailed in Yahoo Finance, saw $19 billion in leveraged positions wiped, the largest single-day liquidation ever, blamed on over $200 billion in open interest. Yet as ABC News chronicled Bitcoin's rises and falls, patterns suggest recovery. Post-2011, it rose 10x. After 2018, 20x. Analysts like those in Crypto DNS predict altcoin October breakout, with Q4 historically strong. Stacker's data-driven history shows prices driven by speculation but maturing. Wikipedia's bubble entry lists cycles, from 2011's mini-booms to 2018's ICO crash. DL News warns of liquidation risks increasing with leverage, but CoinDesk's CD report sees stablecoins, now over $200 billion market cap, as next driver, powering payments and DeFi. InvestX lists top crypto stocks like Marathon Digital and Riot Blockchain set to boom. Moneycom predicts Bitcoin, Ether, Solana, Avalanche, Chainlink, Polkadot, Uniswap, and AAV as 2025 risers. Amid crash, A-Invest notes $1 wipeout as regulatory time bomb, but crypto crash article outlines rebound reasons. Fed rate cuts expected, election outcomes favoring deregulation and technological advancements. Blockchain news quotes Samson Mo on 500K trigger to $1 million. The Atlantic ponders future crashes under deregulation, but current sentiment mixes fear with opportunity. This narrative, woven with drama, captures the emotional roller coaster. Joy of discovery, agony of loss, thrill of innovation. From cypherpunk roots to global phenomenon, crypto's history is a mirror to humanity's quest for freedom, fraught with pitfalls yet brimming with potential. As markets stabilize post-October turmoil, with Bitcoin rebounding slightly by the 20th, the explosion continues, a cinematic spectacle of what's happening in the ever-evolving saga of cryptocurrency, inviting us to ponder. Will the next chapter bring utopia or another cataclysm? Yet the story presses on, with new protagonists emerging, developers coding zero-knowledge proofs for privacy like Zcash and Monero. Layer 2 solutions like Polygon and Optimism scaling Ethereum to thousands of transactions per second. Cross-chain bridges enabling interoperability, though vulnerable to hacks like the $600 million Ronin breach in 2022. Web3 social platforms like Lens Protocol challenging Twitter. Gaming revolutions with Axie Infinity, where Filipinos earned livings playing during pandemic, only to crash with token devaluation. Environmental shifts, with Bitcoin miners using stranded energy in Texas, reducing carbon footprint. Social impacts, empowering women in Afghanistan via crypto donations amid Taliban rule. Economic theories, with economists debating if Bitcoin is store of value or speculative asset, citing volatility versus gold stability. Cultural phenomena, from Dogecoin's meme origins, pumped by Elon Musk's tweets, to Shiba Inu billionaires. Legal battles, Coinbase suing SEC for clarity. International adoptions, Central African Republic following El Salvador. Future visions, quantum-resistant cryptography to counter computing threats. In October 2025's Vortex, as Economic Times reports market cap at $3.88 T, down 1.4%, with BTC at $110K, the question lingers, but history teaches resilience. Each crash forges stronger foundations. Each boom expands horizons. This documentary script, a tapestry of facts and feelings, pulls you through time, from 2008's spark to 2025's blaze, leaving you breathless, informed, and eager for the next frame in this grand, unending film of crypto's explosive journey.